Hello, 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 everyone. Mike Arnold here with the disappearing shoulders because I'm wearing a tie-dye shirt in front of a green screen. I was just recording the Jim Iorio podcast. Sorry, I am a bit late. You will definitely want to watch it when it comes out either Sunday night or Monday morning. I go over a lot of technicals and sort of give an overview of a lot of different markets. So it should be helpful in some little teaching thoughts and everything else. So please tune into that. That will be posted on the YouTube channel and also available on things like Spotify if you just want to listen. But I think you should want to watch this one. Hello, Ken. Welcome, welcome. Hello, George. The closing bell today should be the top 10 pop music charts. We can take a look at the fix. Again, this isn't going to be as long. I'll come back on Sunday and do a more substantial one. Uh, I've been again talking since 2:30 Eastern time. It's now 3:50 Eastern time. So I'm a little technical analysis out. What's going on, William? Let's see. Let's see. Hey, Waka Waka. Oh boy, I still got to get my head together. But I still want to come on to tell you what I was looking at. What an interesting day of trading. By the way, if you are new here, please do consider subscribing, ringing that bell, and hitting the like button. Longer term viewers, please do come back, like, and comment on the videos. So, that being said, I'm only going to briefly look at some stuff today. We had some interesting S&P price action. By the way, I had to take some levels off the charts because of the podcast. So in the S&P, I'm just going to give you, we had some capitulation buying and then backfilling here. But here's what hey, I got to stop this. Smash the like. I completely agree with William. Smash the like. Didn't make any trades today, just watched, thankfully. And this was, look at this. I mean, the price action, look at this 5 minute. I mean, this was some tough trading price action from at least a trend perspective. There were some decent trades if you knew the patterns in here. But you had to be pretty nimble and pretty quick. So what we're watching for next week, let me just show you here. You have this key resistance level at a harmonics 4150, and then 40 close above 4153. We're into a clear path move. We have targets 4199, 4221, 4244. So we do have a potential reversal pattern. Why am I watching that? We got some buying pressure back on the second, retesting this area today on the 6th with some bottoming price action and momentum. So we could easily see a pop back to this 25% retracement harmonic. So you see how nicely this, look at the 12.5% harmonic. You start breaking above there. Intermediate is a daily rotation zone right at the first target, and then the full target into the daily rotation zone. Now, longer term, and I'll review this again Sunday, we do have a bigger intermediate term bottom, but that would need to get above 43.03. So we do have some potentially bullish price action there. Let me get on some shorter term levels. Again, I had to clear off some levels so we didn't confuse people on a podcast because we were also doing the videos. But look at this. You break down below that low from the second. Again, what was the low? Let me give you exactly 40.56. I got a cluster right here. Let me zooming in. Significant level 40.29 to about 40.25 would be my first target, and then 39.94. So if we do roll over and not hold this key low, we could definitely see some price action, especially since this is a potential bottom. What would alert us to that? Sorry, jumping around here. What would alert us to that? So we take today's low to high. You start getting the close back below about 4,100. Really a close back below here. It was just a volatile day. We did have this close down there. It didn't quite get to the 87.5, so we could easily retest this before moving higher, which is what I'm going to be watching for Sunday night / European Monday morning if we do retest this. But this could still be part of a one side of a potential double. So these targets could still remain in place. That's what I am keying off of. Again, so that's where we sit. That's where we sit. Hello, options 22. Just don't see upside with CPI data out next week and everything going on in the moment. Yeah, but I got to play the patterns. And longer term, we are in bearish mode. I mean, if you look at the weekly, look, even running back to this week's high just takes us back to weekly rotation zone, and we start watching for rollover plays. Remember, things don't go in a straight direction. You got to take remember a few weeks ago, we had the bottoming area and then the rip your face off rally for essentially 2.5 weeks before we just gutted it again. So even with CPI data, it doesn't matter. Things can get oversold and you get bounce plays. So we do have potential bounce plays. Why don't we just buy it now then? Because they haven't triggered. Hey, Lauren, how you doing? Lauren, whoa, thank you very much. Super chat. I like the fireworks going. Thank you very much, Lauren. You're a wonderful supporter of this channel. I really do appreciate it. And for anybody coming in late, the reason this live stream's late today is I was recording the podcast with Bob and Jim Iorio, and you're definitely going to want to watch this one. It will give you more insight of the way I do longer-term technical analysis. Jim was exposed to some of the ways I do technical analysis, so you're going to want to tune in next week. I think it went really, really well. So I'm sorry I was late, but I'm trying to get as much information out there to everybody. And we're going to try to make this where I'm on maybe monthly to give you sort of a monthly outlook. Weekly closed bad. I didn't think the weekly closed that bad because we actually closed above the 50. Yeah, we closed down here. We closed at new lows. And I'm going to do some more analysis going into Sunday. I'm just giving you my short-term little stuff so you can digest this. And then I will come back with some longer-term analysis. But we did close above the 50% of this candle. No, it's not a super strong reversal candle, but it is potential. We're at mixed messages. Let me reiterate. Why? Because we got that close on the 1 hour below that 62.5, but we did not hit that 87. So we could still make another push lower and keep this pattern in place. Yes, we could. Yes, we could. But I'm watching possibly for a short-term pop, and then there is a setup for a medium-term pop, but that doesn't have to ever trigger. We do analysis both ways. And again, why? Especially for newer people here, why do we analyze the market from both sides? Because we don't want to get tunnel vision. We don't want to get stuck in something where we're looking, okay, I'm in bearish mode only. And longer term, bearish mode. Longer term, I have systems. Even this system, the one I do with the sectors, is triggered bearish mode. Does that mean you can't have bullish rallies? No, it doesn't. You gotta prepare so you're not sitting here with, like, the blinders they put on the horses so they can't see the other horses don't spook them when they're racing. We can't get that way with the markets. We have to look and say, okay, here's probabilities, here's what's setting up for triggers. Now let me figure out how that all plays together, and if something triggers, what's the risk I'm taking on that trade, and where is it wrong, and where are the targets? That's all we can do. And if it's wrong, we take a stop out, we take that loss, and we move on to the next trade. If we're right, we take the profits. But if we only look at some at the right, like let's say we only go into the market saying I'm bearish, 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 and long term I'm bearish, and this triggers next week, we run up to 42.42. That was a great little short-term trade. Then we can easily roll over and make new lows. I've talked about my longer term targets on here many times, and they're lower than where we are now. So don't mistake short-term moves for long-term moves. And that's why I got to keep analyzing both sides. Otherwise, from a personal standpoint, I know I can get caught up with the heat of the moment. I'm bearish, bearish, bearish. Then I'm caught off guard when something goes bullish. And if I'm only looking at one side of the market, it blindsides me and it can cost me a lot of money. Remember, trading is about the probabilities and about the setups to make money. It's not about trying to say on any given day I'm this, I'm right, because you can be right in the long term and very wrong in the short term and cost yourself a lot of money. So that's why we have to look at both sides. Sat on hands today watching price action. And if there's no great setups and if you don't have anything going on, sit on your hands and do watch the price action. And if you're long term, I'm in bearish mode. I'm watching for the rallies to reestablish short positions. Then that's what you do. If there's no setup, you don't take it. You don't have to trade. Remember, no trade is actually a trade. It's conserving capital for the next good trade. We can look at that, William. Just remind me in a bit. Let me just get over some of this. Does look like a double bottom ABC pattern played out from the top. Yeah, there's a lot. We do have, and from an Elliott perspective, there are some patterns that are playing out that I'm going to do some more analysis tomorrow on, and I'll come back on Sunday. I just have to test out some levels and everything. Looks like a short-term pop might pan out. It might. That's why I identify the key levels and the probabilities with it. But could everything change Sunday night when the futures open and it just tanks? Sure. But that's why, hey, it never triggered. Did the analysis, never triggered. No harm, no foul. Any longer term downside targets? Well, you want how far do you want to go? Next major intermediate target about 39.60. Then target zone of 38.22 to about 38.68. Then one of my major targets is about 3,500. And those are still in place even if we get a short-term rally. I'd let you know if those are off the table. NASDAQ coming down. Again, little choppy. Could not get that next harmonic cluster. Kept reversing at this other one. Again, this isn't as strong, but we do have a potential double bottom. Even with this flat area, it would need a close above 1298.75. Why is this still valid? Because this is the move that started it. This does lower the probability slightly, but you'd need a close above there, and that would be an intermediate term pop. You remember, you do have a clear path move to this upside. That's why I don't want people to ignore this. Why? Because you could get a move to the upside. Targets 13,136. 13,236, 13,338. To the downside, I'm still focused on this cluster area of 12,500, but that could, if we did push down Sunday night, Monday morning, that could still keep this pattern in play. All right. And NASDAQ not as strong a close. So on a rally, the first one I'd be targeting would be the S&P. Why? Because this is a key close below all this prior support becoming resistance. And if you look on a weekly basis, look, this is even down into, this is a closes we haven't seen since over a year ago. And we're back below this major support. Now, we've had 1, 2, 3, 4, 5 weeks down. That is pretty big consecutive down weeks without at least a bounce up close. And also keep in mind, you could complete this little double pattern, not even get back to the weekly rotation zone, and not even do a 25% bounce on the overall longer term harmonics, and then roll over again. So could we still have a potential bottoming play here? Yes, we could. And also look here, even if you completed this double, and that has not triggered yet, so this isn't a guaranteed play yet, we got to wait for a trigger, that just takes you back to these candle bodies of support becoming resistance. Doesn't even get you back to the rotation zone. And you actually want to burn off some of this oversold cycles trying to bottom on a weekly basis. You want to try to get some stuff back up into these tops areas so we can get a nice strong rollover. Hey Raj, thank you very much for the super chat. You are welcome. And just for longer term levels on here, if we get through this 12.5, 12.445 is the last little line in the sand, Minor 12,184. Those will probably be updated pretty soon. I'm actually going to update it now because we have this spike low. So never mind with that 12,184. We get below 12,390. So 12,5, 12,390. Then we don't have much. 1270 to 11,986 would be the cluster. And then longer term, easily I'm expecting us 11,7. Easily. Easily. And then I'm expecting a break even below that in the NASDAQ longer term. I'm going to skip the Dow for now, but there's not a great little setup end of day. This is it's still potentially valid. You pretty much have the same setup. Well, I'll take a look at that Sunday. Sorry, I'm just running out of energy. It takes a lot to do multiple live streams and a podcast in one day and deal with this price action. Oh, the price action. By the way, Russell, again, we do have a potential little double here, but this would be my least favorite. Why? And I'm not talking about this double up here. I'm talking the little minor double because you have all this major support becoming resistance and we're breaking below it. So this is, I'm still very bearish on the Russell. That's the one I'm least bullish on. Even before triggering that medium term double, it could just return to the weekly rotation zone and this prior support becoming resistance and roll over again. My next targets on the Russell, by the way, we just came off a nice harmonic area. Next targets are 1772, then 1738. Let's just take a look. Crude, you'll hear my thoughts on the podcast, but here's the longer term stuff. Pulling back a rotation zone, rotating up. Again, my key level is this 116.40 area for a closing basis. Also, watch the podcast because I go over why I don't like triangle patterns in depth with Jim and how I do like to do stuff. But crude still, your backfill support now is about 107 from a pullback perspective. Minor target is about 112. Major target then is this 116 harmonic area. I don't have to, I'm not going to touch on gold or silver today. I went over that in the podcast when it comes back out. VIX, no, we had a question here. Ken, you asked earlier, could you cover the VIX? Seems like there's a quick double top today, but not sure if it's valid. I didn't see a double top, at least on a short-term basis. We had this little, very sort of ugly head and shoulders pattern, which has confirmed and triggered. This is the only thing on the slightly longer term chart, and I will map this out. So shoulder, head, shoulder. It's a little sloppy, but it is valid because you don't get a lot of rotation in this shoulder. You do in this shoulder, you don't in this shoulder. But I'm using these for pullback targets. So if we go into that slight bullish mode, trigger some of these bullish patterns, 28.46, 27.72, 25.99 are the pullback targets. Where does that fit? On the daily basis, all that pretty much does. Let me also reverse this for a second. Because you see, we didn't get the close above. Again, 62.5% harmonic. Here's your daily. Look at this, spiking up to the 87.5, closing back at that 62.5. No close above there. This is the thing. If we closed above there, then my tune would be a little more bearish. I just got to put the probabilities. Now, this is also pulling back to the 50% of this run up. First target's just beyond the 62.5, but if we get a close Monday or Tuesday below the 62.5, you could easily see this whole head and shoulders play out. And what does the close below the 62.5 target? The 87.5 to 100. And look at the head and shoulders pattern right below the 87.5. So here's the thing for a continued bullish play. Are we just going to put blinders on then and say there's got to be a bullish play? No, they have to trigger first. The head and shoulders did trigger. That's why I'm watching for now the bigger pullback in the VIX. Does it have to happen Monday? No. This could rally up a bit and then roll over again. But that's from the bullish perspective on the VIX. Where else? What else do I have? Let me get to for William. Oh, you want? I can't. I wish they'd change this. I hate that Meta. There's nothing. I mean, still holding this 50% level at this point. I'm the 62 and a half. Nothing's really changed. A close below 194.30. I'm targeting the gap fill. Your minor support area, if you want something minor, still closing above that 50%. But remember, anywhere in this 50 to 62% level is a watch for the rotation back up, is not close below that 62 and a half. On a rally, I would just target this 211.50 area, and then I would target the 50 period before the harmonic, about 217. You start getting a close below 200, then I'd be watching for the close below 124. You get a close below 200, I'd actually start targeting on a shorter-term basis this 194 area. Get a close below 194, then I'm watching for the longer-term gap fill. And I know it's not based off the gap harmonics. They can be a little tighter than that. I'm just giving it a little more room with that spike low. And you want a coin? Was that it? Coinbase. Again, that's when you can't even get up there to that first target. Very bearish level. I mean, coin, you'll eventually get a bounce in this, but this is this long term. You see, you can't even get to the weekly rotation zone. Will I start watching if we get that NASDAQ trigger a potential double bottom? I will watch for a bounce play in this. If you want short-term targets on this, your short-term area on a stronger bounce play would be 116.70 to about 120.34. That takes you back to the 50 to 62.5 with the daily rotation zone. You'd need a close above about 120.50, and then I'd start targeting about 129. Other than that, your lower price targets at this point, I just want to see where these hit. Hit the first harmonic right there. Look at that. First harmonic. If we do roll over and don't stop at that harmonic, the next area is 88.05. There's your key levels. William, thank you for being here. Since VIX did not make a higher high, indices made somewhat lower low. What's the read there? There's still there. That's why I'm watching for this potential bottom in the indices. We did not, the VIX actually acted better than the indices. There was fear in here, but it quickly got sold, even more so than with the bounce in the NASDAQ or the S&P. You know, you still got that close above the 50%. You rallied back, but this was a pretty substantial reversal in the VIX, triggering that head and shoulders. So that's my read, is we might have that short-term bottom Sunday night, Monday morning put in with some follow through to the upside next week. What would invalidate that for me? You get a close back above about this 33.50 area. You get a close above here. 33.50. You start getting close right above there. Then we got some daily close back above there. Then we got continuing significant downward pressure, because you see it has not been able to close above there. We got to close pretty much at there. Spike above, rejection below. Spike above, close down below. Didn't even get the spike above there today. Got the spike above, close below. So that's my read. Seems like oil stocks are still looking good. Some I thought looking good. CVX, HES, APA, SLCA. Let's take a look at some of these. Then I'm going to call it a day, and I'll be back on Sunday. Again, that double did not trigger on that closing basis on the daily. Now turned into a triple. This is why I really like, if I'm going against the pattern, the longer term. Again, longer term rotation zone. That's why I wait for the close. And then as I said before, those were for pullback levels. Yeah, they are. You got the nice little play here. You've got the close back above the 62.5 of this little rundown. Okay, so it still favors. I'm watching for a return to the highs next week, and then a breakout 1.8. If oil, remember oil, that 116 level, we get above there, I'm targeting 180.29 as the next target for CVX. HES, again, return to the highs. Here's your next target. Again, oil's still staying. Sorry, I'm saying again a little too much. I'm tired, guys. 119.35 stop reduction, 121.63. Either move up a stop again, or I definitely take from an educational perspective, that's an area I'd take, lighten up a potential a bit to watch for a slight little pullback to re-add to it to harvest a little price action there. Where would a stop level be for me? Right there. I'd bump it down a little. I'd give it the 50, but on a closing basis, about 105.76. As this moves up, because this is going to keep moving up, even if this pauses out here, that's the area with the rising 50 I'd be watching for a stop. APA, again, it's always helpful to, again, that double never triggered way back when. You do have a new potential double, but it's getting much lower probabilities. I'm not even putting it on here. Your levels for higher in APA, 46.25 stop reduction, 47.28 potential profits, and move up a stop again. Key line in the sand. Look at that with the 50 exponential 62.5%. Roughly, it's 40.06. I just make it close below 40. Longer term, you got your weekly rotation zone. See that corrective dip play into the weekly rotation zone and a rotation up this week. And let's do SLCA. SLCA into the weekly rotation zone. Little bounce up here. SLCA is not acting as well. See, you don't have to look at this. Spike up to 62.5, spike just above it, and then the strong reversal gets me bullish on a close above 1984. It's trying to put in a base pattern here with that weekly rotation zone, but in order for me to get a little short-term bullish, I need that close above the 62.5, or I need some momentum and intraday through about 1930. It is holding the 50 area also. Tesla had a close below 62.5. Does that mean more downward pressure? It means longer term, more downward pressure. If we get the pop in the NASDAQ, though, I'd be watching for another push up in Tesla. Remember, it couldn't close below the support. So, yes, longer term, it does favor a move to 754. But you could even rally above 1,000 again before the next rollover play if the NASDAQ's strong. So, if for short positions, I'd be getting real edgy if it gets above 900 again, if the NASDAQ starts putting in those bottoming patterns. If the NASDAQ rolls over again, then yeah, you easily target there. But I keep tight stops on any short positions, especially if you think the NASDAQ pop. You could even come up to here, this 974 to 982 level. Just return to this key resistance level, couldn't even get up to today and roll over again, and then target these 755 to 703. Remember, those are long-term patterns. The only thing that invalidates that now is if you start getting a close to new highs, or you get a warning sign would be a close above about 1095. So I'm watching for, if again strong NAS pop in, and then another rollover play in Tesla. Thank you, Raj. Well, Apple drop to 140. Apple, I have a target longer term at 141. Longer term. So I think it will longer term. Will it next week? It will not. We'd have to have a horrible rip your face off sell market to get it there within the next couple weeks. More so in Apple, I'm watching for a bounce play and then another long-term rollover. All right, but longer term, I am watching for much lower price action, even from a fundamental perspective. I still want to see longer term this P to E come down. We're going to have overall weaker markets. Apple goods still could have some supply chain issues coming up. And just from a technical perspective, it's in a longer term sell mode, especially with the first cross the rotation zone. So rallies now to key levels are potentially sells once there are reversal patterns. Well, better late than never. You can always watch the replay. Thank you for being here, Sterling. I hope it does, and hope even lower so I can buy more. Well, there you go, Raj. There's nobody much buying. How can we have a rally? Just drop bad from here. Again, things don't go straight down. Things more so they go with the Fed involved, they go straight up if they're doing quantitative easing. Things don't go straight down. You have rip your face off rallies in bear markets. Okay? You got to understand that. They don't correct all at once. We've had things, look at this though. On a weekly basis, this is brutal. That is a big move. From the highs back on the 28th of March to these lows, that's 18% down move. That's pretty, but you get the rallies. Remember, I need everybody to remember this. That's why technical analysis, you can get caught up. Remember, even in your .com, which vertical up, vertical down, look at some of these rallies. Multi-week down. Look, big drop, pretty big pop. What was this kind of pop? 24% pop. Big drop of 1, 2, 3, 4 week down. What was your kind of pop off there? To this, we'll even go to this high. 40% pop. To this high, it was a 42% pop. Another big pullback. Bigger pop. Then even in here, you got little pops. Look, do you see many 5-week downs in here? You have finally here at the starting to get here where it got really ugly. So yeah, can we continue lower? Yes. However, this is rare. All right, you generally get pops in here, but even after this decline, look. I mean, I remember this. I was trading this. 52% rally from low to high. Don't tell me rallies can't happen. You think people were expecting a 52% rally after this? No. People were, oh, how can it be? How can we be bullish at all? And then rolling over again. And then, oh, look at this rally. Please don't forget you have to do your analysis and you have to analyze both sides. 58% rally. Over how many weeks was that? Let me put that back on. How many weeks was that? 11 weeks. 11 weeks. Nearly, what's that, 3 months? A 3-month rally? And then, so that's what I'm telling you. You can't just, yeah, longer term, I'm completely bearish. But short term, we have potential. We have potential. They're not even triggered yet. We have potential. Could this head lower next week? Yes. Could it head lower the week after? Yes. Will you get a bounce? Will you possibly get a 30, 40% rally bounce? Yes. Even when people are bearish. Is a daily double bottom valid on ZN? No, it is off the table. There is no more double and it never triggered. So there is no more double based off of this closing action. This was, again, it came down to the next harmonic. I don't have any reversal pattern just yet. I mean, you have this little micro double. So that's about it, but that's a very short-term play. And that's not even triggered yet. So there's nothing, but you see the next harmonic pretty much closing right at it. So no, there's no daily double. There's a 4-hour double to take it back into the daily rotation zone. Hey, Rich. You're welcome. Wizit. Wizit661, you are welcome. I'm just trying to keep it real for people so you're not caught off guard. Again, I'm going to keep saying this. Analyze both sides and know what triggers either side, and do this for your own setups, your own. You don't have to follow anything I do, but do it for your own analysis. How was my day? Tiring, Rich. 2 live streams and a podcast. Do you think we rally next week? I gave you the closing prices earlier. If you came in late, yes, I do. If they do trigger, I think we have a potential for a rally next week. I think we have a good potential, but they have to trigger first. Would I just go? I do not go into the weekend trying to front run a pattern at all in this market. That would be ludicrous. Will we have just little pops from here? You can have big pops even. Uh, how when we predict, start off watching, go back if you came in late, rewatch this live stream. I go over them, and please join me Sunday afternoon at 3 Central. We'll go over them again. But if you rewatch this live stream, was it at the beginning? I go over what I'm watching for the bullish plays in the S&P and NASDAQ. Can we check NVAX, WIX, TTD? Yeah, then I'm really, guys, I'm really running out of energy. Sorry, I've been talking all day. Novax, you could actually, if you start getting next week's moves above this week's, you could see an easier, you could see another short-term rally in this. Easily you could see a continued rally in this, as long as you don't get a close below about 50. It says 50.04 in the harmonics. I just make it 50 with that round number. And also you see here, that's below this little reactionary move right there. So that's a key line in the sand. A little real quick play would be above your today's high to retest this high area, move up the stops. Then you're in a clear path move. You have the 50 right by the breakdown zone. So this would be a move up stops if you want to use your harmonics, which I'd recommend. Boom. There's your play. Next level above there, let's take a look at that weekly, because that just takes you to the beginning of the weekly rotation zone. Overall, if this does continue a stronger rally, there's no guarantees of this, but I'd be targeting that flat 200 with this for a stronger rally. So you can use these other levels as stop reductions, take off partial profits. You get a little backfill play, because I would not be surprised to see it reacted this area. With a backfill play, it holds here and rotates back up, re-add that on. Again, educational purposes only. And then next key level to move up a stop or take partial profits again would be around 73.30. And then you could, there's a lot of stopping points in here, but there's your full to 82.88. Invalidated if you get a close below 50 before you start breaking out. This potential weekly double. By the way, if I am helping you out here, I know Lauren already did. I'm going to go scroll back because Lauren's such a great member here. Another shout out to Lauren with the $50 super sticker. Really, really appreciate it, Lauren. If I'm helping anybody else, you don't have to do a huge super chat or anything else, but do consider a donation to the channel. It does help offsets the cost and cover some of my time. 111.35 is your longer term play, which is interesting. We're way off from there, but that's a major reversal pattern, minor reversal pattern. You have a percent B buy, aggressive percent B buy on a daily close above today's high, 74.52. And I would then use 79 to raise a stop between 83 and about 84, and You know, if it continues above the daily, you get a close above that daily rotation zone, I'd be targeting 89. But remember, you are against the daily rotation zone and the weekly rotation zone. Longer term, if you put in a long-term bottoming play, your bigger long term is on a weekly close above 111.35, but we're way off from there. Just want to point that out if we don't cover it again. So you have a short-term little play. Looks like you have a divergence, lower low, higher low RSI. Cycle's trying to roll over again, so you could still see a close and then one more pullback play before you get a rotation back up. Cycles on the weekly are at the bottom, but not yet turning up. TTD, again, you have a close below this key support becoming resistance. Don't like this at all from anything bullish. I'd be targeting 47.67 to about 45.28, watching for bottom there. You get a close below this 45.28. My next target's 40.17. On any rallies, your resistance is about 50.36, 50 to 50.36. This is something I personally would not want to try to call a bottom at on this point because I don't have anything. Nothing. That double being off the table in ZN doesn't bode well for tech short term. I was hoping to use that double trigger signal for tech, put in a floor. We still might get the floor. What it means is we could get another bottoming pattern in the notes. What I'm watching for though, here, let me get to yield. Keep an eye on this. This in the 2-year with the yield on a yield basis, even though it could rotate back up into a triple top, we do have a potential reversal pattern in there. So keep an eye on that with the 2-year yield. With that, let's see if there's anything else. Thank you for joining Sunday. Again, 3 p.m. Central. And rewatch this one. That's a great idea. Drink more coffee, Mike. I don't think coffee could do enough for me. So for long-term portfolio, if we get another rally, we should sell, sell, sell. I'd be taking profits at key levels and raising stops. And if the stops are rolled over, then you stop out and then you look to re-enter on key positions at lower prices. Thoughts on BTC? Just cover something. I'll cover this again on Sunday. Just wanted to show something. Somebody else made this chart. Brent Donnelly did it. Here's your correlation between BTC and NASDAQ. You see anything? It's about, I can tell you from doing the math on it, not on this chart, but on something else, it's about 80% correlation. BTC long term, I'm in bear mode. We closed below the 62.5. We didn't quite get down to 87.5. Rallies now, your key resistance is about 37,610. If the NASDAQ gets a rally on, you'll get a rally on in Bitcoin. Once that happens, watching for a lower term, just like NASDAQ, watching for a longer term, lower price action with a major correlation with Bitcoin now. Bitcoin also statistically favors a return to at least 34.8 and then most likely 32.9 before eventually breaking to the 20K level. So rallies in my book are to be sold unless we get some long-term bottoming pattern and something majorly changes in the markets. What is the mechanism of the counter trend rally when many are bearish and not many people want to buy? Well, not everybody's bearish. You had institutional inflows last week. You still had retail's inflows on Thursday. You had a huge amount of retail inflow into ARK on Thursday. People are still buying the dips. You might think it's bearish, but people are still buying the dips. And also, things get technically oversold. And people also think, hey, short-term bottom. Or some people still think long-term bottom. not everybody's is super bearish yet. You'll know when everybody's super bearish when people say I don't want to even tune into some silly YouTube live stream. The market sucks. The market's going to zero. That's when it's really long term. That's when we're watching for a bottom. But you can get short term bottoms in all the time. Not everybody's throwing in the towel in this market. You're welcome, Rich. Thank you for being here. You're welcome. Was it? What do you just tell me? Is that what you want to be called? Was it? Was it? You're welcome. That's what I'm here to do. But they learn lessons that they don't get trapped on Thursday, and people learn lessons. People learn lessons really slowly. You want to know something? You want to talk about learning lessons slowly? There are people who've been buying this all the way down. And they're like, oh, bottom's in, bottom's in, bottom's in. Uh-oh. Oh, now the bottom's in. Now the bottom's in. Well, they're eventually, if ARC doesn't cease to exist, which could happen, there will be an eventual bottom in ARC. Would I be, people are still buying this all the way down. Look at the long-term net inflows from retail into ARC. It's still taking on money, and it took on a ton on Thursday. Okay? Don't underestimate the stupidity of people. All right? Or I shouldn't say stupidity, I should say naivete. Because a lot of people going in this have not been through, they weren't trading or investing back in the dot-com bust. They weren't even trading or investing back in the bust in 08, 09. And they've been in Fed pump markets since then, which has kept money very cheap, rewarded growth stocks that didn't need to be rewarded, okay? That are actually full of crap and could eventually disappear. Look at this. Here's your Teladoc chart. Yeah, you got the run-up play from the pandemic and the remote medicine thing, but Teladoc was never worth 300. It wasn't even remotely close to 300 bucks. Even if we still had a pandemic on, it wouldn't be worth 300 bucks. Look. And people are buying this, including Kathy, all the way down. So don't underestimate it. You know what? And I tell you what the PE would be, but there isn't one. You want to know why? They don't have any earnings. They have revenue, but their expenses are more than their earnings. They don't even have a PE. People get caught in manias. They get caught running stuff up, and they keep doing it all the way down. People learn lessons in trading and investing very slowly, and a lot of people don't make it. Now, from a long-term investment point of view, because if you hold long enough, you do have some stocks that just disappear, like your WorldComs, your Enrons, But a lot of stocks will come back. But remember, I'll harp on this all day long. Cisco, still in existence, right? Yeah, still trading. Great company. Look at this. Cup. Oh. Still, if you bought up here, you're nowhere near getting your money back still. And this has been since 2000? And you're still not at break even if you bought up here? No thanks. Use stops, manage your risk. People don't learn. Well, I'm glad you learned the lessons. I'm glad you learned. You're one of the few. I'm glad. And it takes a lot of... I guarantee there's other people in here who have made the same trading mistake more than once. If you've made the same trading mistake more than once and you wish to admit it, you might have cured it by now, but if you've made the same trading mistake more than once, say something in the chat. I know I have. I've been doing this, though, since 92, and do I make the same mistakes now that I made way back when? No. Because I learned. Nice parting shot. Don't underestimate the stupidity of people. Tired people always say what they really mean. I revised that. All right, that was the first thing. I said the ignorance. I was being nice. Hey, look, you got a nice little potential double in Cisco. Whee! Look what I found. What will turn this bearish market to end and change the bullish sentiment for long? I can't see the future. We'll need a longer term capitulation bottom. Probably need the rates to stop being hiked. We'll need to at least admit we're getting into a recession. And then remember, the market's forward looking, so we'll get more and more people throwing in the towel and saying, I don't want a thing to do with this. And we'll get some technical patterns at the very end. Right now, we only have short term bounce patterns. That's what's going to turn it. Can I tell you the exact price? No, I do have price projections. Can I tell you the exact ending time frame? No, I can't. And if anybody says they can, they are a liar. I've done hundreds of systems testing. I've talked about this before. And on a longer term basis, anything over roughly about 8 weeks, there loses predictive ability very rapidly for time frame. Not necessarily for price, but for time frame. Keep that in mind. If you have something that's dead accurate, send it over to me and I'll let me test it out. And if it pans out, I'll put you in touch with some people. More than once a week for a long time. See? People make mistakes. Now, I bet you've learned lessons too, Sterling. I bet you there's certain things you won't do again because it's so ingrained in you. It's like touching the hot stove. You're like, I burned my hand way too many times. I'm not doing that again. But is it easy? No, it's not. This is one of the toughest games in town, especially on a shorter term basis, because it toys with your emotions. And you have to be more like a robot. You have to have that mindset and not get emotionally involved. And the trouble with that is money's involved. And when money gets involved with people, it gets really emotional. And especially people are like, I'll buy more ARC. And people even buy more. Well, if I average down my cost, if I average down, it always got to get back to, look, I'm buying a ton down here. Now my average price is $70. All it has to do is get back to 70 for break even. Then it drops lower. And eventually they run out of money or get the margin call. Or the worst thing that happens, here's what's even worse. They get their average cost down, it gets above it, and they get out of it. And then they're like, phew. And then they do it again next time. And then one of these days, it just blows up in their face. And then they never learn the lesson. I'd rather have people learn a painful lesson more at the beginning of their career than at the end, because you learn it in the beginning, you're more likely not to repeat it. You learn it at the end, it's the end. More things I won't do than I will do. Very glad to hear it. Let me just get through these last couple comments and I have to call it a day. May I ask you again, what is the target high price of Apple may potentially go to with the next counter trend rally if it happens next week? What's the price? Well, here, there's no great bottoming pattern just yet. However, this is where we use our harmonics. So short term, we get the bounce. We get the bounce above today's high. I'd be roughly targeting the 62.5 would be my first level, 161.87. You get a close above there, then I'd target 164.95 with the 50-period exponential. There's your two targets. Is it guaranteed? No, but you get the close above that 62.5. You have close to 70%. It will target that 87.5% price action with the 50. Is it guaranteed? No, it's not. There are no guarantees in this market. You should know that especially. And if anybody says there's guarantees, they're lying to you. You bought at 150. What? Want to sell? First off, if you're chicken, you're scared. Please don't trade too big. You bought at 154. So on a rally next week, especially a rally, I'd move up a stop. Here's a little, let's go through this, and then I'm calling it quits. And I'm serious this time. Back to the 200, I'd raise a stop. And you can always remember, you can take partial profits. This is what people aren't good at. That's why I stress, take partial profits. Okay, you bought at 154. You're at the 25% harmonic roughly now. You get back up above the 37.5, anywhere between about 159 to 159.70. I'd be locking in some partial profits and get my stop to break even. Why? What's the worst that happens then? It comes up here, it rolls over again. You stop out the rest at break even, you still put something in the bank. You continue higher, you get above this 62.5 level. Let me take off this other one so you're not confused. Because why in here, there's another rollover play. So if you come up here and don't get the close above 62.5%, you can take another partial profit. You do get the close above there, then I'd target this level. But all along, I'd be raising your stop. Why? Because if you get the rollover play, let's say we get a 2-day bounce in the NASDAQ, Apple stalls out in here, and then NASDAQ rolls over hard, you've raised your stop on your other remaining amount, so you're not at break even on that anymore. You raise your stop, and then it rolls over, you get stopped out you took some profit, and you get stopped out for a profit. If it keeps running, you keep raising your stop. There you go. You are welcome. There's no harm in taking partial profits and then locking in the rest, especially in these markets. If we were in a super strong bull market, I'd give it a little more leeway. If we're not in a super strong bull market, we're in a rip your face off, from my perspective, bear market longer term. So you got to be err on the side of caution, protecting your money. There are times to be aggressive. There are times to be safe. This is where safety pays. You're welcome. I like to meet the guy who bought Peloton at 170. I would buy him dinner. Have you heard? Do you have any information, Rich, on they're looking for secondary investors to help shore up the company? You want to be this guy, the guy who bought the top? What was? How about 171.09? What do we do for him? But here's again. Look, here's another one. Vertical up, vertical down. Oh, wait, we're even below the lows after the IPO. Uh-oh, there are people who are buying this all the way down. And I own a Peloton. I love the product. But do I love the stock? No. No. So there you go. I will leave it at that. At some point, again, could this be an interesting stock play? Yeah, I think it's a takeover candidate at some point. So it will be. Sorry with my tie-dye disappearing partially. It's tie-dye Friday. With that, I'm calling it a day. I can barely speak anymore. I hope everybody joins me Sunday. I'll get out a sector overview at some point this weekend also. And again, if you did learn something, there you can donate with Patreon. You can donate with Buy Me a Coffee. Links in the description. Or you can always do a super chat like Lauren did. I really appreciate any support of this channel. And with that, by the way, also, if you are new here, please consider subscribing, ringing that bell, and hitting the like button so you know when I do go live and you know when I post other pre-recorded videos for the channel. I'm here with Bob to help you become better traders and investors. And have a great weekend. I will talk to you in a couple days. Bye for now.